Breaking news is once again sending shockwaves through the crypto market as XRP and the future of the United States financial system continue getting mentioned together in conversations surrounding payment modernization, blockchain infrastructure, stablecoin regulation, tokenized finance, and the next generation of digital settlement technology. Over the last several weeks, discussions around the future of global banking systems have intensified dramatically, and every single time these topics begin trending online, XRP immediately becomes one of the biggest names discussed across the entire digital asset industry. Now, before social media transforms speculation into confirmed reality, it is extremely important to separate facts from internet hype, because online narratives can spread faster than actual official announcements. As of right now, there is no confirmed public statement saying the Federal Reserve has officially adopted XRP as part of a national payment infrastructure system. There is also no official announcement declaring XRP to be the official bridge asset of the American financial network. However, what is undeniably real is the massive transformation currently happening inside the global financial system. Around the world, governments are researching digital currencies. Central banks are exploring new forms of financial infrastructure. Major payment companies are investing billions into blockchain technology. Asset managers are discussing tokenization at levels never seen before. Regulators are drafting stablecoin legislation. Banks are studying real-time settlement systems. And perhaps most importantly, the pressure to modernize outdated financial infrastructure is becoming impossible to ignore. That is exactly why XRP supporters are paying such close attention. For years, Ripple argued that the traditional banking system was too slow, too expensive, and too inefficient for the modern digital economy. Even today, international transactions can still take multiple days to fully settle depending on which institutions are involved, how many intermediary banks participate in the transaction, and what compliant procedures are required behind the scenes. For everyday consumers, these delays may simply feel frustrating. But for multinational corporations and global financial institutions moving billions of dollars internationally, these inefficiencies create massive operational problems. Liquidity becomes trapped across multiple jurisdictions. Settlement delays increase business costs. Currency conversion friction slows transactions. Financial institutions must dedicate enormous resources simply to keep traditional systems functioning smoothly. Ripple entered the market specifically attempting to solve those problems. Instead of focusing only on speculative hype cycles like many crypto projects, Ripple built its long-term strategy around institutional utility. The company consistently promoted XRP as a digital asset capable of helping financial institutions move liquidity across borders faster and more efficiently than legacy banking systems. Supporters believe this approach is exactly why XRP continues remaining relevant despite years of market volatility and regulatory uncertainty. While many projects focus primarily on meme culture and speculative retail trading, Ripple spent years talking about interoperability, enterprise-level blockchain infrastructure, settlement optimization, liquidity efficiency, and institutional partnerships. At the time, many people dismissed those ideas entirely. Traditional financial institutions openly criticized crypto. Regulators appeared hostile toward blockchain innovation. Many analysts believed digital assets would never become seriously integrated into mainstream finance. But now the environment is changing rapidly. The world is becoming increasingly digital. Consumers expect instant transactions. Businesses demand faster settlements. International commerce operates 24 hours a day. Financial infrastructure built decades ago is struggling to keep pace with modern technological expectations. This pressure is forcing institutions to explore new solutions. And this is exactly where blockchain technology enters the conversation. Over the last several years, blockchain has evolved from a niche experimental technology into a serious institutional discussion. Stablecoins are now being debated inside government meetings. Tokenization has become one of the fastest growing areas inside institutional finance. Banks are researching blockchain settlement systems. Asset managers are exploring tokenized securities. Governments are studying digital currency infrastructure. The financial world no longer sees blockchain as irrelevant. Instead, many institutions now view digital financial infrastructure as a possible foundation for the next generation of global payments and settlements. That broader transformation is one of the biggest reasons XRP narratives continue gaining momentum. Supporters believe Ripple positioned itself years ahead of the market by focusing specifically on institutional payment problems rather than purely speculative retail hype. Every time conversations surrounding settlement modernization, liquidity movement, and digital financial infrastructure begin trending, XRP naturally becomes part of the discussion. The Federal Reserve narrative intensified this excitement because the United States remains one of the most influential financial powers in the world. Any major shift involving U.S. payment infrastructure would likely impact the broader global economy significantly. As policymakers and institutions discuss modernization efforts, investors immediately begin speculating about which blockchain technologies could potentially benefit. For XRP supporters, Ripple appears perfectly aligned with these developments. The company consistently promoted faster settlements, reduced transaction costs, and improved liquidity efficiency. Exactly the kinds of themes now dominating conversations surrounding the future of finance. Critics, however, continue raising important concerns. Some analysts believe governments and central banks will ultimately prefer fully centralized digital systems rather than relying on public blockchain assets. Others argue that institution-issued stablecoins may dominate payment infrastructure because they offer more direct regulatory control and oversight. There are also concerns surrounding interoperability, scalability, compliance, cybersecurity, and competition between different blockchain networks. These debates remain unresolved, and investors should always remember that speculation does not equal confirmed adoption. At the same time, though, it is becoming increasingly difficult to ignore the larger transformation happening across the financial sector. Large asset managers are investing heavily into tokenized products. Payment companies are researching blockchain settlement infrastructure. Governments are building regulatory frameworks. Financial institutions are preparing for a future where tokenized assets and programmable money may become much more common. The financial system is evolving faster than many people expected. Another major factor fueling XRP speculation is the rise of tokenization. Tokenization refers to representing real-world assets digitally on blockchain networks. This could eventually include currencies, stocks, bonds, commodities, real estate, and many other financial instruments. Supporters believe tokenization could fundamentally reshape how value moves throughout the global economy. If assets become increasingly digital, systems capable of facilitating liquidity movement efficiently between networks and currencies could become extremely valuable. Ripple supporters often argue that XRP was designed precisely for that kind of environment. They believe XRP could potentially function as a bridge asset connecting different financial ecosystems while improving settlement speed and reducing operational friction. Again, these are future possibilities rather than guaranteed outcomes. No one knows exactly which technologies will dominate the next generation of financial infrastructure. But what cannot be denied is that the conversation surrounding blockchain integration has become dramatically more serious compared to just a few years ago. Another important reason XRP holders remain optimistic is because regulation is slowly becoming clearer. For years, one of the biggest obstacles preventing institutional adoption was uncertainty surrounding digital asset laws. Large financial institutions cannot comfortably operate inside unclear regulatory environments. This is why crypto legislation matters so much. Governments around the world are debating how digital assets should be classified, how stablecoins should operate, and how blockchain systems can fit inside existing financial frameworks. These discussions are extremely important because regulatory clarity could unlock much larger institutional participation inside the crypto industry. Ripple itself became deeply connected to this conversation because of its legal battle with the SEC. That case became one of the most closely watched legal fights in crypto history because many investors believe the outcome would influence the future treatment of digital assets in the United States. Positive developments surrounding Ripple boosted confidence among XRP supporters because they viewed those moments as signs that institutional adoption could eventually become more realistic. Still, uncertainty remains. The financial system is currently in a transitional phase. Governments are experimenting. Institutions are researching. Regulations are evolving. Technologies are competing against each other. No single company or blockchain network has guaranteed dominance. However, one thing is becoming increasingly clear. The world is moving toward greater financial digitization, whether people are ready for it or not. Payment expectations are accelerating. Settlement systems are modernizing. Tokenized assets are expanding. Blockchain infrastructure is attracting institutional investment. Digital finance is becoming a major strategic priority globally. And because Ripple spent years positioning itself around institutional liquidity and payment efficiency, XRP continues remaining one of the most closely watched assets whenever discussions surrounding the future of finance begin heating up. Many XRP supporters now believe the next phase of crypto adoption may look completely different from earlier market cycles. Instead of being driven mostly by speculation and hype, the future could be defined by infrastructure, utility, compliance, tokenization, and institutional integration. That shift could completely transform how investors evaluate blockchain projects. Projects connected to real-world financial utility may become increasingly important if governments and institutions continue integrating blockchain infrastructure into mainstream systems. This is exactly why XRP supporters remain extremely optimistic about the future. They believe Ripple spent years preparing for a world where liquidity efficiency, interoperability, and digital settlement infrastructure become critical components of global finance. Whether XRP ultimately becomes deeply integrated into future financial systems remains uncertain. But supporters argue that the current direction of institutional finance looks increasingly similar to the future Ripple envisioned years ago. And that is why every headline connected to payment modernization, blockchain settlements, stablecoins, central banking, tokenization, and financial infrastructure immediately creates massive excitement across the XRP community. Because investors believe the world may be entering the early stages of one of the biggest financial transformations in modern history, and they believe XRP could potentially play an important role if blockchain adoption inside institutional finance continues accelerating over the coming years. As the global financial system continues accelerating deeper into a fully digital era, one of the most important structural transformations unfolding right now is the large-scale institutional integration of blockchain infrastructure, tokenized asset systems, and real-time settlement technologies into traditional finance. What began as an experimental concept within early crypto communities has now evolved into a serious global financial discussion involving central banks, regulatory authorities, multinational banks, payment networks, sovereign institutions, and some of the largest asset managers in the world. This shift is no longer theoretical or future-based speculation. It is actively happening in real time across multiple layers of the financial system. And this accelerating transformation is one of the key reasons XRP continues to remain at the center of global crypto discussions whenever the future of payments, liquidity infrastructure, and financial modernization is mentioned. Supporters of Ripple strongly believe that the company positioned itself years ahead of this global shift by focusing on solving one of the most fundamental inefficiencies in global finance: the outdated and fragmented structure of cross-border payments and liquidity movement. Even in today's highly digital world, international financial transfers still rely heavily on legacy banking systems that were designed decades ago. These systems typically require multiple intermediary institutions to complete a single transaction, each adding time delays, compliance verification steps, operational overhead, and liquidity constraints. As a result, cross-border payments can still take anywhere from several hours to multiple business days to fully settle, depending on jurisdictional complexity and banking relationships involved. For individual users, this may appear as a minor inconvenience. But for multinational corporations, global import-export businesses, financial institutions, and payment processors handling billions of dollars in daily transaction volume, these inefficiencies represent a massive structural cost burden. Capital becomes fragmented across multiple banking systems. Liquidity must be pre-funded in different regions. Settlement delays reduce operational efficiency. Currency conversion processes introduce additional fees and friction. Risk management becomes more complex due to delayed settlement finality. These issues are not new. They have existed for decades and remain one of the most persistent inefficiencies inside global finance. Ripple entered the financial technology space with a focused mission to address these systemic inefficiencies through blockchain-based infrastructure. However, unlike many early crypto projects that focus on ideological decentralization narratives or retail-driven speculation cycles, Ripple positioned itself around institutional integration and enterprise-grade financial utility. The core idea was not disruption for publicity. It was optimization. Ripple's vision was to enhance existing financial infrastructure by enabling faster, cheaper, and more efficient cross-border liquidity movement without forcing banks or financial institutions to abandon their existing regulatory frameworks. This approach made Ripple fundamentally different from most early blockchain platforms. While many projects focus on community-driven hype cycles and short-term trading activity, Ripple consistently emphasized long-term institutional partnerships, regulatory compliance, enterprise adoption, and real-world financial system integration. Supporters argue that this long-term positioning is now becoming increasingly relevant as the global financial system enters a new phase of structural modernization. Across the world, financial institutions are no longer ignoring blockchain technology. Instead, they are actively evaluating how distributed ledger systems, tokenized financial assets, and digital settlement networks can improve efficiency, reduce costs, enhance transparency, and optimize liquidity management. One of the most powerful catalysts behind this transformation is a global shift toward real-time financial systems. In modern economies, speed has become a fundamental requirement rather than a luxury. Consumers expect instant transactions. Businesses require immediate settlement finality. Global commerce operates continuously across time zones. Financial infrastructure built on legacy systems is increasingly unable to meet these expectations. This growing demand for instant settlement is forcing traditional financial systems to evolve rapidly. Central banks are actively researching central bank digital currencies, CBDCs. Governments are developing stablecoin regulatory frameworks. Financial institutions are investing billions into blockchain pilot programs. Payment networks are testing instant settlement technologies. And regulatory agencies are building frameworks to govern digital asset ecosystems at scale. This represents a foundational shift in global financial architecture. It is not just technological evolution. It is systemic restructuring of how money moves across the world. And because Ripple has consistently focused on cross-border liquidity optimization, institutional settlement efficiency, and financial interoperability, XRP naturally becomes part of broader industry conversations whenever financial modernization is discussed. The narrative linking XRP to the Federal Reserve and U.S. financial infrastructure emerged as part of this broader global trend toward financial system modernization. As the United States continues evaluating potential upgrades to its national payment systems, market participants, analysts, and investors naturally begin speculating about which technologies could be involved in future financial architecture. However, it is extremely important to clearly distinguish between speculation and confirmed implementation. At this moment, there is no official confirmation that XRP has been adopted by the Federal Reserve or integrated into any U.S. national payment infrastructure system. Large-scale financial infrastructure upgrades require extensive multi-year processes involving regulatory approval, institutional coordination, cybersecurity validation, compliance integration, operational testing, and systemic risk assessment. Even if blockchain technology becomes part of future financial systems, adoption would occur gradually, in controlled phases, rather than through immediate large-scale deployment. Despite this, financial markets often respond to narratives far faster than official implementation timelines. This is why XRP-related discussions tend to gain momentum whenever global conversations around payment modernization, blockchain adoption, or central banking innovation appear in financial news cycles. Another major force driving XRP-related attention is the rapid expansion of tokenization across global financial markets. Tokenization refers to the process of converting real-world assets into digital representations on blockchain networks. These assets can include currencies, equities, bonds, commodities, real estate, intellectual property, and other forms of financial value. The implications of tokenization for global finance are extremely significant. If widely adopted, tokenized systems can enable near-instant settlement of financial assets, increase transparency in markets, fractional ownership of high-value assets, and programmable financial instruments that operate autonomously based on predefined conditions. Liquidity movement across global markets could become dramatically more efficient. Settlement cycles could shrink from days to seconds. Financial markets could become more interconnected, automated, and accessible. This is why institutional investors, asset managers, and regulatory bodies are increasingly focused on tokenization as a key component of future financial infrastructure. Ripple supporters believe XRP could potentially play a supporting role in this evolving ecosystem by acting as a liquidity bridge between different tokenized asset networks, currencies, and financial systems. The underlying concept is that as financial assets become increasingly digital, the need for seamless interoperability between systems and efficient liquidity transfer mechanisms will become critically important. However, this remains a theoretical use case rather than a confirmed global standard. At the same time, competition within the blockchain and financial technology sector is intensifying significantly. Multiple financial institutions are developing private blockchain networks. Banks are building proprietary settlement systems. Regulated stablecoins are gaining institutional adoption. Central banks are designing national digital currency frameworks. Technology companies are creating payment infrastructure platforms. The future financial ecosystem may ultimately involve a hybrid system where multiple technologies coexist rather than a single dominant blockchain replacing all others. Despite this uncertainty, one structural trend is becoming increasingly clear. Blockchain technology has moved beyond experimental innovation and is now being seriously evaluated as part of mainstream financial infrastructure planning. Just a few years ago, most major financial institutions avoided public discussions about crypto and blockchain technology entirely. Today, many of the largest global banks, payment providers, and asset managers openly discuss blockchain integration strategies, tokenized financial products, and digital settlement infrastructure. This represents a fundamental shift in institutional mindset. It signals that digital financial systems are no longer speculative concepts, but strategic components of future global finance. Regulation is playing a central role in shaping how quickly this transition unfolds. Institutional adoption cannot scale without clear legal frameworks. Financial institutions require regulatory certainty, compliance structures, operational guidelines, and risk management standards before integrating new technologies into core financial systems. This is why crypto regulation has become one of the most important global policy discussions. In the United States and other major economies, lawmakers are actively debating digital asset classification frameworks, stablecoin regulations, and blockchain market structure legislation. These decisions will directly influence the speed, scale, and structure of blockchain adoption within traditional finance. Ripple's long-standing legal battle with the SEC also became a major reference point in this broader regulatory conversation. The case highlighted a lack of clarity in digital asset classification and reinforced the need for consistent legal frameworks governing blockchain-based financial systems. Many XRP supporters interpreted positive legal developments as a signal that regulatory clarity and institutional adoption may gradually improve over time. Still, uncertainty remains one of the defining characteristics of the current financial environment. The global financial system is currently undergoing a multi-layered transformation where governments, institutions, and private enterprises are simultaneously experimenting with different technologies, frameworks, and infrastructure models. There is no single unified roadmap for the future. However, the overall direction of movement is becoming increasingly clear. The global financial system is gradually transitioning toward digital settlement infrastructure, tokenized asset markets, real-time payment systems, and blockchain-integrated financial ecosystems. This transformation is still in its early stages, but its long-term impact could fundamentally reshape global finance in ways comparable to previous major financial revolutions. For XRP supporters, this environment represents a long-term structural thesis rather than a short-term speculative narrative. They believe Ripple positioned itself early within a macro trend that is now becoming increasingly mainstream across global financial systems. And as institutional adoption of blockchain technology continues expanding, XRP remains one of the most closely watched digital assets connected to the evolution of global payments, liquidity infrastructure, and the future architecture of financial modernization.